Howdy, everybody. Welcome to Liberty Call for Monday, February 10th, 2025. Hope you're having a fantastical day out there in the interwebs. It's getting cold here in Colorado. We got a cold front coming through, and I think today, and I think the high Wednesday is like 9. Woo! And some snow. Hey, awesome. All right. Well, markets are bouncing back as investors digest Trump's latest tariff moves. The SP 500 and NASDAQ are both up. With tech stocks like Nvidia and Broadcom leading the charge, while steel and aluminum producers rally on the backs of tariff boosts. The dollar is gaining strength amid global trade war fears, and all eyes are on upcoming inflation data and Powell's testimony. In corporate news, McDonald's missed U.S. sales estimates after an E. coli outbreak, but rallied on strong global numbers. And BP is climbing after activist investor Elliott Management took a big stake. So before we dive in, I need some help from you. If you could give me some thumbs up, a like, share, subscribe, a follow, and press that notification bell. All righty. Well, let's dive into the news. As soon as there it is. Oops, wrong screen. There it is. All right. Dow Jones today was up 0.37%, 165 points, closed at 44,468. S&P 500 up 0.67%, 40 points, closed at 6066. NASDAQ up 0.98%, 190 points, closed at 19,714. The VIX was down today 4.72%. It's at 1576. Canada up 0.85, Brazil up 0.87, and Mexico up 0.27. In Europe, Germany was up 0.67%, the UK up 0.77, France up 0.42, the Netherlands up 0.83, Spain up 0.16, Italy up 0.5%, Switzerland up 0.29, and Portugal up 0.83. Russian exchanges both green today. MOEX up 1.54, RTSI up 2.06%. And the overnight markets, the Nikkei in Japan was down 0.12%, Australia down 0.34%, New Zealand down 0.02%. In China, the Shanghai was up 0.56%, the Shenzhen Component up 0.52%, China A50 up 0.05%, DJ Shanghai up 0.65%, Hang Seng up 1.84%, and the Taiwan weighted down 0.96%. All right. So those are the markets for today. Well, let's hop into the weekly economic update. Stocks posted modest losses last week as tariff deals, January jobs data, and Q4 corporate reports injected volatility into the markets. The S&P 500 slipped 0.24%, while the NASDAQ lost 0.53%. The Dow Jones fell 0.54%, and overseas markets were up 0.17%. All right. Tariffs, Q4 reports, and jobs. On Monday, stocks opened lower on news that tariffs on Mexico, Canada, and China went into effect over the weekend. However, markets rebounded mid-morning following news of a U.S.-Mexico deal that delayed new trade rules. News of a similar last-minute agreement with Canada followed. Stocks continued their rally midweek, led by technology stocks from companies that provided upbeat Q4 corporate reports. The S&P 500 and NASDAQ rose for the third consecutive day on Thursday, while the Dow experienced a slight fall as investors digested more corporate earnings reports. The week closed on a down note as a mixed jobs report and cautionary inflation outlook disappointed investors. All right, so mixed signals on the labor market. As has happened several times in recent years, two job reports told conflicting stories about the state of the jobs market. On Friday, the Bureau of Labor Statistics reported that 143,000 jobs had been added for the month and a four-year low. Earlier in the week, the ADP report showed the economy added 188,000 new jobs ahead of the 150,000 economists expected. What do these reports, or why do these reports tell different stories? Economists point to various factors, including how January can be challenging to measure accurately, typically due to the more significant number of laid-off seasonal workers. All right. Economic data this week. Tuesday, we have Cleveland Fed President Beth Hammack and New York Fed President John Williams speaking. Wednesday, the Consumer Price Index comes out, and Atlanta Fed President Raphael Bostic speaks, and the federal budget. Thursday, weekly jobless claims and the Producer Price Index. And Friday, the Import Price Index, retail sales, industrial production, and business inventories. Companies reporting earnings this week. Today on Monday, McDonald's and Vertex Pharmaceuticals. Tuesday, Coca-Cola, S&P Global, Shopify, and Gilead Sciences. Wednesday is Cisco and AppLovin Corporation. And Thursday, we have Applied Materials, Deere, Palo Alto Networks, Brookfield Corporation, and Moody's Corporation. All right, so that's everything in the weekly update. Good stuff. Let's jump into the market recap. U.S. stocks rise as tech surges, overshadowing tariff worries. U.S. stocks surged on Monday, driven by a tech rally led by NVIDIA, despite renewed trade tensions from President Donald Trump's tariff announcements. Excuse me. The S&P 500 and NASDAQ saw significant gains, with tech stocks leading the charge. NVIDIA jumped over 3% after Evercore ISI called the recent pullback a buying opportunity. The stock had dipped due to competition fears from Chinese AI startup DeepSeek, but Evercore noted that DeepSeek's innovations offer only incremental cost savings without disrupting the broader industry. This comes ahead of NVIDIA's quarterly earnings set for February 26th. President Trump announced plans to impose a 25% tariffs on all steel and aluminum imports, affecting major exporters like Canada, Brazil, and Mexico. This follows his 10% tariffs on Chinese goods last week. While the tariffs stoked fears of rising inflation, investors held out hope for potential exemptions, especially for U.S. allies like Mexico and Canada. Investors are closely watching Wednesday's consumer price index release, expected to show steady inflation. Persistent inflation could deter the Federal Reserve from cutting interest rates soon. Most people think it's probably going to be at the June meeting, if it happens at all. Fed Chair Jerome Powell will testify before Congress this week, offering insights into the central bank's policy stance amid growing tariff-induced inflation concerns. McDonald's stock rose over 4% after reporting stronger than expected international sales, particularly in the Middle East and Japan. U.S. steel companies like U.S. Steel Corporation and Nucor saw gains following the tariff news. BP ADR surged 6% after activist investor Elliott Investment Management acquired a stake, pushing for strategic changes. Lyft shares climbed nearly 5% after announcing plans to launch autonomous robotaxis in Dallas by 2026, powered by Mobileye, which also saw its stock rise by 16%. And finishing up, gold prices soared to an all-time high of $2,911.44 as investors sought safe haven assets amid rising trade tensions. All right, so everyone's just kind of on pins and needles with everything going on. So I don't see it as terrible. Would I rather have tariffs than income taxes? Yes. Do I want tariffs and income taxes? No. So, we'll see how this all shakes out over the next couple of months. All righty. From article from Zero Hedge, New York Fed survey shows one-year inflation expectations unchanged, makes a mockery of the University of Michigan propaganda. All right. Last Friday's disappointing jobs report was unexpectedly overshadowed by a dramatic surge in inflation expectations from the University of Michigan's Consumer Sentiment Survey. The survey showed one-year inflation expectations jumping from 3.3 to 4.3%, driven largely by political divides. Democrats anticipating inflation at 5.1%, while Republicans expected it at 0. It's probably somewhere in the middle, I would guess. This sharp divergence sparked significant market volatility, wiping out billions in market cap as investors feared more Federal Reserve tightening. However, the New York Fed's inflation expectations, released shortly after, painted a more stable picture. One-year inflation outlook remained unchanged at 3%, below the median analyst estimate of 3.1, effectively contradicting the University of Michigan's alarming figures. This discrepancy widened the gap between the two surveys, raising questions about the reliability of consumer sentiment data. The New York Fed survey also reported that three-year inflation expectations held steady at 3%, while five-year expectations ticked up to 3%, the highest since May of 2024. Inflation uncertainty remained stable in the short term, but increased slightly for the long term. Interestingly, despite concerns about inflation, other economic indicators showed mixed signals. Household spending growth expectations fell to a four-year low, while the perceived probability of job loss rose to its highest level since July of 2021. Paradoxically, expectations of finding new jobs and household income growth also increased, reflecting a complex labor market. Adding to the confusion, a separate Cleveland Fed survey of business leaders showed expectations for the consumer price index growth at 3.1%, down from 3.8 in October. Markets remain volatile as the Fed's response will hinge on whether inflation expectations remain anchored amid President Trump's escalating tariffs on key trading partners, including China, Mexico, and Canada. Right. That's awesome news. All righty. Well, finishing up here, our last article of the day is from our friends over at First Trust, Mr. Brian Westbury's Monday Morning Outlook. This week's article is titled Data Games. All righty. The Federal Reserve the federal government often faces criticism over its economic reports in recent years have provided ample reasons for skepticism. From questionable COVID policies like 15 days to slow the spread and arbitrary 6-foot distancing to political controversies like the Trump Russia collusion narrative and dismissals of Hunter Biden's laptop, trust in federal institutions has eroded. The mistrust extends to routine economic data, including the monthly jobs report, which investors scrutinize closely. While skepticism is warranted, it's important to recognize the complexity of tracking an economy as vast as the U.S. Most mid-level government workers handling reports like employment data are doing the best with the tools at hand. For instance, Friday's jobs report showed non-farm payrolls increased by 143,000 in January, with upward revisions of 100,000 for November and December. However, it also included a significant downward revision of 589,000 for March of 2024, sparking concerns about data manipulation. Some argue this revision suggests the Labor Department skewed data to favor the Biden administration, but this theory falters under scrutiny. The department had already forecasted an 818,000 downward revision back in August, months before the election. If the goal were to mislead voters, they could have delayed the announcement until after the election or understated the revision earlier. However, the report also included a substantial upward revision to civilian employment and labor force figures, largely due to late Census Bureau data reflecting the recent surge in immigration. This delay raises questions about whether immigration data was intentionally suppressed for political reasons. In sum, while skepticism towards government data is healthy, it's equally important to question conspiracy theories. The labor market remains relatively strong, and not all reporting issues stem from malicious intent. Yeah, I think a lot of it's just so much data and trying to cram everything into your databases and have accurate reporting is probably a big part of it. Now, whether or not they hold back on information, that's up for the skeptics. And I mean, I'm a very skeptical person, so I always little grain of salt with any of the reports. But I mean, you can't fudge it for too long because you'll start to see the unemployment numbers just start to rise. They can't hold those off for too long if that's what they're doing. And secondly, I mean, my most important thing I would be watching right now would be consumer spending. When that starts to tip over and wane, then I would start to really pay attention to the jobs numbers, because once revenue slows down for business, then they can't continue to keep their employees in place. So we'll see what happens. So that's kind of my game plan for this year, and it was the same last year. Paying attention to the spending numbers, and I think they'll give us a pretty clear picture of where the economy's headed over the next year or two. So, all right. Well, that's everything that I had to cover for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All your financial planning needs can be addressed there. So give me a call. I'll be happy to help. Hope everyone has a wonderful evening, and I'll talk to everyone next time. Adios.